for taxpayer dollars to ensure efficiency and accountability. Number two, investing in rural infrastructure as a catalyst for growth. Third, ensuring support for American farmers, ranchers, and producers. And number four, protecting the health and safety of people, plants, and animals. Today, the subcommittee will be performing our oversight function of the Farm Credit Administration and the farm credit systems as a whole. Unfortunately, we'll not be able to discuss FY18 budget due to the transition with the new administration. But we will focus on a few areas that are important to this subcommittee, including the operations and budget of the Farm Credit Administration, the policies and regulation of the administration, and the worsening financial situation in today's farm economy. Many people outside the agricultural community have never heard of the farm credit system, much less do they know what it actually does. And I must confess, I've got to brush up myself, having been given 19 years since this committee has actually had a hearing on this. But what many people don't know is that the farm credit system has been in existence since World War I, and it finances a large portion of the agricultural community in this country. With total assets of $314 billion, the system is on par in size with some of the world's top 10 banks. The farm credit system was created to fill a crucial role to provide financing to farmers, ranchers, and producers that other banks may not be able to provide. Agricultural financing is more unique than any other sector in our economy, with a wild, unpredictable swings possible in commodity prices and land values that in our heartland. This subcommittee covers every aspect of the USDA other than the Forest Service. While we do not provide direct funding to the Farm Credit Administration, we make funding decisions for USDA and the agricultural stockholders that have a direct and real impact on the farm credit system. As Chairman Tonsager notes in his written testimony, the Farm Credit Administration and Congress make crucial decisions related to rural infrastructure, broadband, water systems, and housing, just to name a few. Thus, this subcommittee's oversight responsibilities for FCA are just as critical for the other parts of our jurisdiction as the other vital USDA roles. Without the farmer and the rancher's access to abundant and affordable credit, the less chance all of our citizens have to access abundant supply of high-quality, relatively low-cost foods. I look forward to discussing the Farm Credit Administration's updated budget request for FY17. The FCA is unique because it does not receive direct appropriation. Instead, Congress places a limitation on the assessments collected from the system's institutions as its source of funding. As you mentioned in your testimony, Mr. Chairman, the FCA has had to do some belt tightening in the past year. What you failed to mention is FCA accumulated excess funding of totaling $16 million in carryover balances as recently as 2013. The subcommittee has kept the limitations relatively flat in order to require FCA to spend the carryover. In addition, FCA has a special provision that many agencies would be very envious of, and that's the ability to increase its funding by 10% with a simple letter to Congress. There has been no intention of Congress trying to limit FCA's funding. This subcommittee has simply been making sure responsible fiscal practices are carried out. With that said, I will be sure to examine your request for an increase in your limitation for the remainder of the year now that those excess funds have been expended. With regards to policies and regulations of the Farm Credit Administration, I can imagine some of my colleagues will have questions regarding the complaints from traditional banking sectors. I do have some general inquiries myself, as you can imagine, from constituents have from time to time asked those questions. Finally, one thing on everyone's mind is rural America, and especially our constituents, is the state of the farm economy. 2017 will be the fourth year in a row that farm income will decline, according to estimates by the Department of Agriculture. I want to discuss the Farm Credit System's role in supporting farmers during this downturn, and in particular the Farm Credit Administration's work to ensure that we do not see a repeat of the 1980s Farm Credit System failure. Chairman Tonsager, thank you for appearing here today, for taking time out of your schedule to appear before our subcommittee. I look forward to hearing your testimony and having a productive hearing as we move forward on the issues that will be brought up. I believe this will be your first in your new role as chairman of the Farm Credit Administration. Mr. Hall, I'd like to equally welcome you to the as your role of member of the board and the current chairman of the Farm Credit System Insurance Corporation. Your role in providing a backstop to the farm credit system is now more valuable than ever. So at this time, I would like to recognize the ranking member of our subcommittee, Mr. Bishop from Georgia, to see if he has any comments he would like to make.
Thank you very much, Mr. Chairman, and let me also take this opportunity to welcome Chairman Tonsager back and Mr. Hall. It's been far too long, as the chairman indicated, since we've had a hearing on the Farm Credit Administration, and I thank you for taking the time today to come before our subcommittee. The Farm Credit Administration plays a vital role in helping to finance our agriculture sector, and our farmers and our producers rely on FCA to foster the providing of credit that's necessary to get their products to market. And through your role on the FCA board, you have the important responsibility of approving FCA's policies, its regulations, its enforcement activities against those who would engage in unsafe and unsound practices. So I look forward to a robust conversation on the current strength of the farm credit system and on any risk or potential weaknesses that you might see from your position on the FCA board. I'd also like to discuss any personnel limitations or programmatic needs that could be addressed to further strengthen our farm credit system. I do note that while rural communities have had particularly difficult challenges over the past decade, that there is some good news. Back in 2009, rural America was really feeling the devastating impact of the recession. Rural communities were shedding 200,000 jobs a year. Rural unemployment was 10%, and the poverty rates had reached heights that were unseen in decades. And of course, the rural communities were facing stagnant wages, out-migration, and a shortage of investment capital. But over the past few years, with the help of the FCA, there are some strong economic indicators that show that rural America is rebounding. Rural unemployment has continued to decline. It's now below 6%, and it got there in 2015 for the first time since 2007. And rural poverty rates have fallen, not as much as we want them to. Median household incomes in rural areas increased by, I think, 3.4% in 2015, and rural populations have stabilized and are beginning to grow. Child food insecurity nationwide is an all-time low. So those are some positives that I think we should remember, although we have a great deal of work to do to get Americans back to the point and to help us increase the quality of life for all of us, and particularly in rural areas. So I welcome you here, and I thank both of you for taking the time to come and to share this with us this morning. Yield back, Mr. Chairman.
Thank you, Mr. Bishop. Mr. Tonsager, we will now listen to your testimony and look forward to your comments.
Chairman Adderholt, Ranking Member Bishop, and members of the committee, it is a privilege to appear before you today to report on the budget of the Farm Credit Administration. I have a written statement to submit for the record. President Obama appointed me to the FCA board in March of 2015. Last fall, the president designated me FCA board chairman and CEO. I had the pleasure of serving on the board with two distinguished colleagues, Jeff Hall, who is here today, and Ken Spearman. FCA is an independent federal agency that regulates, examines the banks, associations, and related entities of the Farm Credit System, including the Federal Agricultural Mortgage Corporation, or Farmer Mac. Our responsibility is to ensure that the system meets its congressional mission to provide a dependable source of competitive credit for agriculture and rural America. FCA was created by an executive order of President Franklin Roosevelt in 1933. During the agricultural credit crisis of the 1980s, Congress gave FCA regulatory and enforcement powers similar to those of other financial regulators. FCA is not an appropriating agency. We are funded primarily through the assessments paid by system institutions. Congress oversees our administrative expenses and sets an annual cap on them. The Farm Credit System, which was established in 1916, is the nation's oldest government-sponsored enterprise. It is a nationwide network of borrower-owned cooperative financial institutions and affiliated service organizations. Currently, the system includes 4 banks and 73 direct lending associations. The banks provide loan funds to the associations, which in turn provide operating loans and long-term real estate loans to farmers, ranchers, and other eligible borrowers. One of the system banks also has the authority to lend to agricultural cooperatives and rural utilities. Farm credit banks and associations cannot take deposits. The system obtains loan funds by selling securities on the national and international monetary markets. The securities are not guaranteed by the federal government. For more than 100 years, the system has helped our nation's agricultural producers provide abundant, affordable food and fiber to people at home and around the country. Currently, the system supplies 41% of our nation's farm credit. I am pleased to report that the system's banks and associations are fundamentally safe and sound. For the first 9 months of 2016, the system reported modest loan growth, solid earnings, and higher capital levels. But as regulator of the system, we do have some concerns. Debt to asset levels are rising while net farm income is declining. Interest rates, while still low, have begun to increase, and crop prices are expected to remain weak throughout fiscal year 2017. These factors are putting downward pressure on the value of Midwest farmland. Meanwhile, high production levels are further weighing down prices and profits in the protein and dairy sectors. The non-accrual rate on system mortgages was 0.76% as of September 30th, up slightly from a year earlier. The non-accrual rate on its production loans was 1.04%, up almost a quarter percentage point from the previous year. To help the system weather this downturn in the farm economy, we are monitoring conditions closely, and we are examining institutions to make sure they are guarding against both concentration risks and collateral risks. Overseeing the safety and soundness of a nationwide network of lending institutions requires more resources during times of economic stress. Fiscal year 2017, our request was $70.4 million. Under the continuing resolution, the agency has been operating under the cap established by Congress of $65.6 million. As a result of the cap, we've had to delay hiring, reduce travel and relocations, and postpone IT projects. We would like to respectfully request that the cap be increased to $68 million. This will allow us to move forward with targeted IT investments and to meet pressing human capital needs. Thank you, and I'm happy to answer your questions.
Thank you. As I mentioned in my opening statement, the farm economy is experiencing a significant downturn at the moment. There are signs on the horizon that some segments of the agriculture community are going through some difficult times, and USDA estimates that rough waters will continue. In looking at the number of assets and outstanding loans in the system, it appears that risk exposure has grown significantly over the past 4 years. The amount of assets has increased by 31% to $314 billion, and gross loan volume by 30%. Some have expressed concern that there could be a repeat of the 1980s farm credit crisis. The similarities are certainly there. For example, a drop in the farm income nearing 50% over the past 4 years, increasing debt loads, falling farmland values, increasing interest rates likely, farm loan delinquencies on the rise, and 1 in 10 farms are highly leveraged. While there may be reasons for why we may be or why we may not see another credit crisis, I'd like to hear your reasoning on this issue and just some of your thoughts on as we look forward down the road.
Yes, and we agree with the concerns. We, are, of course, are very concerned as well. And as a farmer, I went through the 1980s farm crisis in South Dakota and watched very closely some of the things that occurred at that time. It was dramatic, and enormous numbers of people left rural America, and an enormous number of farms went through a bankruptcy process. It was just a horrible situation. And at that time, Congress took several steps to try to alleviate the potential risks of happening again, of credit availability particularly. For us, they established a Farm Credit System Insurance Corporation to back the bonds that were associated, and Chairman Hall is chairman of that group. There's now about $4.45 billion of assets that have been collected from the system to back it up. They established this agency as an arm's length regulator where it wasn't prior to that, so we bring a different perspective, perhaps a more aggressive perspective. The system's assets have grown significantly. The capital is now up $52 billion, and the system is consolidated to a degree. The consolidation is of concern, of course, but at that time there were over 1,000 farm credit institutions, and now there's 77 or so. So it's much more capital bearing is much stronger. At that time, we had double-digit interest rates, and now, of course, we have much more modest interest rates that can help us get through that time. So there's been a number of steps. And another tool we got that may come up as a question is our ability to allow them similar entities to lend to, an authority that was established by Congress in order to broaden the balance sheet of the farm credit system, where typically it's narrowly focused on agriculture, and that authority allows for a broader opportunity of loans to be made to support the system. So, you know, we believe that a lot of steps have put us in a better condition to meet the challenges that you described.
Let me, just your opinion on the state of the farm economy as a whole, the system in particular. So based on your comments there, you feel confident the system could weather the shock?
Yes, I think that we are in much stronger circumstances. I think it seems to me this is a much more corrosive long-term challenge than it is an immediate one. I think, you know, economically, some of the economists talk about quite a long cycle of low income coming up. And so the effect of that over time is very problematic. It affects just agriculture and rural America together, and I become concerned about that. And I am concerned about the impact on individual farmers and producers, because at that time, as we all know, there was an enormous exodus of agriculture, and how we deal with the problems of the income stream to producers. When the moment comes when a loan officer has to have a discussion with the producer about their future plans, I think that's one of the most challenging and important elements of this. We have to look for the best possible outcomes for producers who cannot simply move forward. And in the 1980s, we had the worst possible outcomes. And so my hope is that we can generate a dialogue about how producers who are going through the stress, how we help meet that stress and deal with their whatever choices, help them deal with whatever choices they have to make.
What's the delinquency rate for loans in the system?
The delinquency, there's various numbers one can focus on. We focus here on non-accrual loans within this, and these would be loans that are not actually making payments at this time. So the delinquency rate, and I can't recall it offhand, but it's somewhat higher than this, but the number I tend to focus on is when those that are not making loans for extended period of time. And so it's relatively low at this time.
Okay. Oh, can you get that for us?
Yeah, absolutely.
For the record?
Yes, sir.
Okay. All right, Mr. Bishop.
Thank you very much. Mr. Tonsager, your written testimony stated that hiring delays, reduced travel and relocations, and delays to executing IT projects were due to the FY16 funding cap of $65.6 million, causing FCA to request $68 million for the FY17 to meet your mission. The hiring freeze was just established in January of this year. So while it has the potential to negatively impact future hiring actions, I'd like to understand where you were prior to that executive order. And aside from the summer pathways hiring you mentioned earlier, can you elaborate for us what other hiring actions FCA have been undertaking to fill the current and upcoming personnel gaps? And finally, I'd also like to know how FCA has implemented your published August 8th, 2016 Equal Employment Opportunity and Diversity Policy to increase diversity within the ranks of the examiner and other positions.
The challenge for us in the hiring freeze is it takes up to 4 years to fully train an examiner and commission them at that point. And so we have approximately 20% of our employees at this time that could leave at any moment, and that number moves up in just a few years to the 30 or 40% range. And so since we have to plan in such a long-term time frame, our ability to keep a steady stream of people coming in is the great challenge on the human resource time. The cap at this point, the effect on us has been relative terms modest. But and again, we have to look at a long term. We see anywhere from 8 to 11 examiners a year leaving, and so that's pretty substantial. We have a pretty good class of new examiners developing at this time. So we want to be able to move forward and make sure we have extremely high qualified people for the examination process that's become very complex. So I hope that answers the first part of your question.
Can you provide us some information, though, on the statistics-wise of the demographics of your equal employment opportunity diversity results?
Yes,
so we can see overall what the makeup is.
We'll be happy to. We have implemented the plan. It requires each of the institutions to identify how they're going to serve the populations in their business area. And those plans are examined for, and we look closely at them.
Thank you. There have been some questions regarding some criticisms of FCA and the FCS by banks. There's been controversy about loans which your institutions have participated that some say are outside the basic mission. And of course, some folks refer to the banks look at a $725 million loan to Verizon and reports of loans for casinos and restaurants. And some people have difficulty understanding how that's consistent with the mission. And also, there's another of criticism relating to loans to wealthy individuals. In the American Banking Association Journal, they say that half of the loans made by the FCS went to just less than 1% of all borrowers in 2015, and an average loan size of $24.1 million. And so some have asked why the FCS institutions, which are taxpayer-supported to some extent with certain tax exemptions, should make loans to people who are too wealthy to get farm payments. Would you respond to those criticisms for me, please?
Yeah, I'll do my best to try and run through the list. I guess I would start with the 1% number that you mentioned. 3/4 of the loans made by the Farm Credit System are $250,000 or less. So 3 out of 4 doesn't jive very well with the number provided by the bankers. Additionally, of course, within the portfolio of the lending institutions, there are thousands of cooperative institutions.
Let me ask you, is that the number of loans or is that the value?
That is the number of loans.
Right. So we're also talking about the amount, too, the size of the loan.
Yeah, and of course, there are large farms that are involved with it. The statute requires us to serve all producers in areas, including big and small. But also in that, as I was mentioning, there are thousands of cooperative institutions that are borrowers, especially of CoBank, who have very high credit lines. And I'm not sure if that number is included in this particular estimate that they may have. But if it did, it would account for a lot of the size of the $24 million average, just because that's, they're service providers to the institutions.
I think my time is about out. I've got 9 seconds, and I yield that back.
Thank you, sir.
Thank you, Mr. Chairman. Sir, welcome to the committee. Thanks for your testimony today. I want to pick up where Chairman Adderholt left off regarding the status of the agriculture economy. Also, as a child who grew up in the 80s on a farm. I saw a lot of my neighbors going bankrupt. We worried every day that we were next. And, you know, the farm economy survived, but it changed after that. And you discussed some factors that are different today, which I think we've all highlighted. We're not in the same situation we were in 1980. You've given us a little bit of an idea of what the status is right now. Help us understand, as you work with farmers who have you know, high yields. In Kansas, you know, we have, last year was the highest wheat yield in history. We're the biggest wheat producing state. We produce a number of other products very significantly, yet the commodity prices are cut in half. And so as your folks are sitting down with farmers trying to help them with their portfolio, I'm assuming there's a balance there. On one hand, we need to be careful that we don't support allowing farmers to over-leverage themselves. At the same time, we need to be there as farmers try to maintain their farms and stretch these dollars. So give us an idea of how the current agriculture economy is going to affect how your folks deal with farmers and find that balance.
Well, it's certainly a constant discussion we're having with the farm credit system, because I think we have a mandate to serve farmers in good times and bad. And we've had some good times that have helped us build balance sheets and build the capacity to the system. So I think the system has a real obligation to work very hard with individual producers. And I've spent many years thinking about this particular circumstance where we work with people. We all want success stories. And I think for all producers, we want to see success stories. But I think how we handled things in the 80s, where farmers are so committed to their farms, they're willing to go to the ultimate max to borrow every dime they can just to stay in business. I think that was one of the lessons of the 1980s. They lost all equity. And I think we need, somewhere in this, we need people who provide really good advice to producers on their decision-making going through that period. So if it becomes almost impossible for them to succeed, that somebody objectively is helping them make really good judgments about how they take their next steps. And I think that is, one of the important elements we might see coming into this difficult period. It's going to happen to some degree with producers, of course, and how we manage that, I think, is important. But I do believe that there is an obligation on the farm credit system to the maximum extent possible to go as far as they can to help producers get through and hopefully make it into a new, when we see better economic growth occur.
One of the partnerships we have here is we want to ensure that we're doing everything we can to create the tools available in the markets to help these farmers. We also want to make sure we're not making it harder on farmers with undue burdens coming out of Washington, D.C. And I think we also want to make sure we have emerging markets. You know, in Kansas, we exported more than $4.1 billion in agriculture products. So I guess as we look to develop agriculture policy, can you talk a little bit about a couple things? One, undue burdens we might be placing on the farm economy that you've seen or that your folks are seeing, and two, how farm credit can help in terms of exports and helping us open up additional markets.
Yeah, we are in the spirit of the regulatory review. The President, of course, has talked about that. We initiate every 5 years a regulatory review process where anybody can come forward and say, this particular regulation isn't as useful for us, and we go through the process. So we've chosen to initiate, starting in June, that regulatory review process. We don't currently fall under the President's memo regarding, because we're an independent agency, but we want to take up in the spirit of the regulatory review process in any case. We can help with exports because of the authorities given to particularly CoBank, based out of Denver. They can finance international trade opportunities. And so we will continue to be focused on that and want to make sure that credit availability for trade providers can be useful.
As we look to increase markets and we look to open up the opportunities to sell these goods across the world, are there things that we can be doing to assist with that? Clearly, trade is going to be a big topic in this administration, and we want to ensure in this committee, I think, that we protect those who are trying to export goods around the world.
Yes, and we certainly agree. We know that importance, a significant portion of agricultural commodities are traded, and we will do our best from the resources we have to assist that.
Thank you, Mr. Chairman.
Ms. Pingree.
Thank you, Mr. Chair. Thank you both very much for being here. Nice to see you again, and I know you've visited our state in roles, so anything I say about the state of Maine probably will be familiar to you. I first want to say I echo some of the concerns people have raised about some of the more unconventional loans. I do think it's important for all of us to understand those, just to make sure we thoroughly understand the system and some of the questions that are asked of us at times. I rarely hear from the bankers in my state about farm credit, and just for the record, I hear from the bankers in my state quite a bit about other issues, and I'm always happy to hear about it. What I often hear from farmers is that it's hard to find banks today as familiar with making agricultural, fishing, or forestry loans as it used to be. A state like Maine, where we've gone through a transition from being very much of an agricultural economy to changing quite a bit, and now coming back into that sector more often than not, I fear, from small beginning farmers, medium-sized farmers, farmers who want to hang on to a family business, child's coming back in, and they need some capital to make it grow. So I want to talk to you about a few of those programs, and one of them I want to start with is one that's administered by Farm Credit East. They're the ones who serve Maine, and it's called Farm Start. Been there about 11 years. It targets farming, fishing, and forestry startups that probably wouldn't get a traditional bank loan. For us, that's been a really important part of revitalizing our rural economy. I frequently say it here, we're one of the few states where the average age of our farmer isn't going up, and where we have new farms coming under cultivation all the time. So we're in a great period of growth in the rural economy, but it's tenuous growth. It's not easy to make money on a farm, and it's particularly hard for beginning farmers to get that capital that they need. As I understand it, this program, you can receive up to a $75,000 investment, and you also have an advisor to help with the business planning and record keeping, which is sometimes very challenging when you're also trying to run the farm. You've invested about $7 million in 150 participants in New England. You're allowed to take on slightly riskier deals than banks are willing to do, and as I mentioned before, sometimes banks are just not as familiar with the challenges of a farm, and it's harder for them to evaluate it. So this is really important for our farmers, as I said, who are trying to pass on to the next generation, sell their farm to younger people, or young people who are anxious to get involved in it. So can you tell me, from your perspective, how it's going? I'm interested to know, because I understand this is a regional decision. Does this happen in other regions in the country? Is it a program that should be encouraged to happen in more places, particularly those places that are looking for some stability and growth in the rural economy? And do you think you're reaching enough young beginning farmers? Can you just talk about it a little bit, now that I've talked most of the time?
Yeah, thank you. Thank you for the question. Congress chose or instructed us, passed a statute that required this to create a young beginning and small farmer program nationally. And the way it was implemented was that each farm credit institution had to create their own program. And they could create different models. In some cases, it'd be a signature loan for a modest loan to help somebody start. In some cases, it's an interest rate break or a break on collateral issues. And so every institution has created this program that is in their own design. And we use our examination staff as part of the examination process to make sure they're following their own program. So what they've set down for their institution, in this case, Northeast Farm Credit, is the program they think works best for their geographic area. But we follow up with our examination team, ask them how it's going, get data about how it's going, information we can certainly provide to you. That has been, I think, a great success. And so I think the opportunity is for the individual institutions, if they hear from you or from their constituents or their borrowers, they can maybe adjust the programs and have maybe a more unique twist to their area if it takes that. So I think that's precisely the program that's been done.
So just to follow up on that, I understand how you would sort of follow that people are following their own program rules and administering the program appropriately. But how do you evaluate whether it's reaching enough farmers and whether it's adequately serving the mission that you're charged with serving?
Well, we do look at the performance of the programs in each area, but as to their adequacy, I think that's a fair question to ask that I can't respond to. I just don't know the answer to say for Maine, is this enough for that area? Of course, they continue to bear the responsibility for the performance of their institutions, and perhaps some could go deeper with the subsidy they might provide, but perhaps some can't.
Well, I'm exactly out of time, but I'd be interested in following up with you both on evaluation tools for our region, but also I'd like to see what happens in other regions, just to see if, in spite of the fact that we seem to be doing well in my area, but is this applying to the rest of the country where I'm sure it's also needed? Thank you very much. Thank you, Mr. Chair.
Ms. Rooney?
Thank you, Mr. Chairman. As you know, for more than a decade, we've been fighting citrus greening in the state of Florida, and that's something that obviously saps our trees of their vitality and produces a bitter-tasting fruit. Florida's citrus industry is also facing a decreased demand for orange juice, and both these problems are directly impacting our production. The USDA estimates that the FY17 season will be about 70 million boxes, and that's down 1 million from their estimates in January. That's something I believe that we can survive, but until a cure is found, which we're working on, they need to get trees in the ground as soon as possible. So my question to you, a couple questions actually. What role do you think the FCA can play in ensuring our growers have the access to credit they need in order to make this happen, especially in light of the fact that as farm incomes drop, credit quality will drop, and that impacts our growers' access to credit and their repayment capacity. What types of restructuring policies or programs do you have in place to ensure my growers can repay in a responsible and suitable way? Like what kind of assurances could you offer them at this time? Thank you.
Well, one of the unique characteristics of the farm credit system is that it is required to give producers borrower rights. And that means that if a producer does not believe that the farm credit institution is working with them well enough to adjust to their needs, they can challenge the decision by the farm credit institution about restructuring of their debt. And so it's one of the unique requirements of the agency, and it's one of the opportunities for producers that if the system isn't working with them as they think it should be, then they have the right to challenge the decision-making process of the system to correct that. My belief is that the system will work very hard. Each institution, and I've had the opportunity to travel to 13 states since I've been back in the agency, and I plan to get to every state at some point, and meeting with them and making sure that they are respecting the idea that we are an agency of the federal government or GSE that has this requirement about going to greater lengths to help producers through difficult times. And it's precisely like that I think the system was created for. So please be assured that we will press them regarding their needs to service producers to the extent they can be.
Thank you. Thank you, Mr. Chairman. I yield back.
Mr. Pocan?
Thank you, Mr. Chairman. And thank you to our witnesses and Mr. Tonsager. Just as we talked ahead of time, you helped put together a blue cheese operation in Montfort, the western edge of my district. I think actually Ron Kine probably has a bigger share of that town, but I've got a little bit of it as well. So very nice to have you here. In your testimony, you mentioned the mergers of the financial institutions that you're dealing with. And specifically, I guess my question would be, I know you said there's some stress because of the staffing you already have and needing for more specialized staff because of that. But can you just talk a little bit about the circumstances behind those mergers and what impact it may have had on access to credit?
Well, when a merger is proposed, we go through an extensive process to look at every single element of the merger proposal, including and primarily how that is going to affect the service to individuals. And it's a tough call. I think all of us like to see smaller institutions be successful because we believe they're more intimately engaged with the producers in their community, and so that's important. But the 1980s taught us that too small an institution can be overwhelmed sometimes if it isn't careful, and larger institutions have a bit of a greater capacity to do that. So it is a constant struggle and constant debate within the agency and the system each time there's a proposed merger. And I had the opportunity to speak to their annual meeting a few weeks ago, and I proposed a year of dialogue between the Farm Credit Administration and the system about the merger process, because we have some enormously strong and large financial institutions, and we have some very small ones that that feel very strongly that they can best serve the needs of their producers. So these are farmer-owned organizations, so they live in these territories and they talk to their friends and neighbors. And it's one of the great attributes of a cooperative and the system in that it has that intimate relationship. So I appreciate your question. We look very hard at these individual mergers and hope that we're working towards creating the right balance in each geographic area about what's available.
Has it caused any access to credit problems that you can?
Not that we're aware of, but I think that needs to be constantly on the table. The system has about 1,100 local offices across the United States, despite there's only 77 institutions. They do have extensive networks of offices.
And specifically, you talked about the high production in dairy. Are you noticing any unique trends in that area? Clearly, that's one of the biggest.
Yeah, and as a 25-year dairy farmer, I went through that. It's dairy policy is one of the toughest policies of all because it takes such a commitment on the part of a dairy farmer to be in it and then have to live with prices that they don't always have control or don't have control over. My understanding for this year, there's a belief there will be some modest improvement in dairy prices because of reduced productions in other parts of the world. And so, I'm very hopeful that maybe we'll see some strength in the market.
And then I feel like I have to bring this issue up every chance I get is rural broadband, obviously very important in my district and many people's districts. Is there any way that within your agency you can help ensure that rural broadband infrastructure needs are not forgotten in the work that you're doing?
One of the direct authorities of CoBank is rural utilities, including broadband, and they have great interest in that area. I know it's very difficult in remote areas because generally there's a need for some kind of subsidy in order to afford the capital involved with it. But I think all of us really want to see broadband being as expansively used as possible. And so my hope is that CoBank particularly will engage as heavily as they can in that.
Yeah, whatever you can do to encourage that. I mean, we're just finding, we're tracking cows and everything else with it now. And if you don't have it, I live in one of those areas where we don't have it. So I hear it a lot from my neighbors. So it makes my trips back home a little better if we help address this. So thank you very much. I yield back, Mr. Chairman.
Mr. Valdeo.
Thank you, Mr. Chairman. Mr. Chairman, as the only dairyman up here on the dais, I appreciate those last questions. Pricing has been difficult and has been one of the things that we've worked on through some of the Farm Bill and for California specific, and hopefully we can get on a better footing for the future. And that's moving along. As far as the federal pricing, I mean, it's just a headache. Prices actually dropped again a little more this week. Yeah. So my question, though, is in your remarks earlier this month at the Farm Credit Council annual meeting, you talked a lot about system structure. Can you describe any areas of concern or potential improvement within the farm credit system structure?
Yeah, I think that they do a great job. I think that they do aggressively go out. I think that we need to look at the long term, and the number one thing we need to do is make sure that every potential borrower, creditworthy borrower, has the opportunity to have access. And I think as, I don't have a dramatic proposals about modification of the system structure, but I think we should think in terms of 3 or 4 criteria going forward that might make sure as the system evolves and changes, that it evolves in a way that first and foremost assures access by producers and the users of the programs.
So in the CRS report that my staff got for me, it mentions or talks a little bit about how the consolidation has happened quite a bit over the last few years, from the 1940s where there were over 2,000 lending institutions to now we're down to basically 4 regional banks. And so you mentioned in that speech a point where the system could be left with too few banks. How do you reduce systemic risk? Do you think it would be beneficial to the system to have more district banks? And if so, how do you suggest this is received? Could some of the larger associations convert into system banks? And when we had that really tough time in the dairy industry, 2010, that was one of the issues. People were running from the industry. I mean, they wanted nothing to do with, and that was just a tough time for all. So I guess those two kind of pile into each other.
Well, again, I think, we need to look at the ability to spread risk. So, for an instance, institutions that have to make a lot of loans to a lot of producers in the area, the way that risk is applied. A smaller institution just can't make a number of credits that might be larger and take too much risk. So we're constantly pressing them on how they spread their risk. So I think the balance point comes as institutions that are able to provide the intimate service that some producers especially need, but also either to take the risk themselves or be able to spread that risk with banks, which we do. There's an enormous amount of risk sharing that goes on with individual banks across in a particular credit. So I think finding that balance within the system where we can assure when an institution makes a loan, they are capable of dealing with the risks associated with that and working intimately with the borrower.
Before I'm done on that hiring freeze, making sure that you put people on the ground that actually understand what agriculture is something that is amazingly helpful when you're trying to make decisions. And when you have to explain to your bank what agriculture is, the amount of risks involved, and the fact that we're getting water allocations hopefully in the next few weeks when crops should have actually been in the ground a few months ago. And it's just a tough time in California, but having people at least working with your lending institution that understands or has some sort of background is always helpful. So thank you again for your time, and I yield back.
Mr. Laurel.
Thank you very much, Mr. Chairman, and good morning. Thank you for being with us this morning. Mr. Tonsager, a number of the federal programs have income limits in place to ensure that the resources go to those in need. Programs such as food stamps, Medicaid, WIC, Pell Grants, Head Start, school lunch, Section 8 housing programs. They all have limits in place. We spent a lot of time investigating fraud and waste and abuse in the SNAP program, little time investigating abuse in the crop insurance program, which does not have income limits in place. In fact, 50 members of the Forbes 400 list of the richest Americans got at least $6.3 million in farm subsidies between 1995 and 2014, and that's according to the Environmental Working Group analysis. It's my impression that lending through the Farm Credit Administration is not subject to income limits as well, and that some of your resources may be going to, while good people in all respects, but are going to those who are wealthy individuals who may, in fact, not need the same kind of help that, some other farmers might. I've just mentioned, and Mr. Chairman, if I can, I'd like to put this article in the record. It is an April 5th, 2016 article by Bert Eli. In 2015, almost half of FCS lending goes to just 4,458 borrowers. And my colleague, Mr. Bishop, mentioned the size of some of those loans. And the issue becomes, as the question is put here, can taxpayer subsidized financing be justified for any of these borrowers? My question to you in this regard, and I have a couple of others, is your view of applying income limits to Farm Credit Administration, to FCS, and might that allow you to be able to address the needs of lower income farmers and also reduce the risk to U.S. taxpayers?
There's a number of thoughts in there. I'll try to do my best briefly. Is the system, no, there is not a limit to income that exists.
Right.
The story you referred to, and I'd have to read it carefully, but as I mentioned earlier, a number of the accounts, there are large loans to large institutions, but within the portfolio, there's also large loans to grain elevators and local cooperatives and dairy processing companies that take larger lines of credit that may be part of that number. And so I would just want to, in discussions about limitations, I'd want to make sure that we would be looking at those institutions that serve producers, and we wouldn't want to have particular limits on them that would interfere with that. Mm-hmm. The system does not have a direct subsidy from the federal government. It has some advantages that have been given to it that are important, but its job by definition and for the last 100 years is to serve all producers, large and small, throughout rural America. So, you know, of course, we could have many policy
Yeah.
discussions about it, but
Certainly, but I think it's probably worthy to take a look at what the portfolio is, who are the entities or the individuals who are getting the loans. I think as we do with other federal programs in so many ways. In addition to that, I think it might be that the Congress, and I won't pursue this, needs to re-examine the rationale for SCS's similar entity lending authorization that Mr. Bishop made reference to as well. And those are the kinds of things I think we ought to ask for this committee of your agency. Let me just talk about the Northeast for a quick second here. My home state of Connecticut, diverse, large farms, small farms, part-time farmers. The average size of farms in my district is about 62 acres. Majority of sales are under $1,000. As a regulator, how do you take into account the unique market conditions of the Northeast and ensure that these small farms do not get left behind? And do you have a breakdown for each region of the country on the number, amount, and types of loans that are given out? And if you do have such a list, I would like to have you submit that to this committee. But how do you ensure that small farms do not get left behind like those in my congressional district?
I think it is great of interest to us, and the Congress has wisely created a Young Beginning and Small Farmer Program
Right.
that we have implemented, and we can provide you plenty of information regarding the services in your area and the number of producers that are receiving those services. We examine each institution for their compliance with the Young Beginning and Small Farmer Program, and we have the data that can show you the performance of that program in your area as well as nationally.
Okay, would love to see that, and the amount of the loans are going to farmers in my community. They're not all new and beginning farmers. There's a lot of dairy farmers and people who have been there for years and years and years who need help.
Sure.
Thanks. Thank you.
Yeah, thank you.
Thank you, Mr. Chairman.
Dr. Harris.
Thank you very much. I just have a question about the poultry industry, which is important in my district. At the USDA Outlook Forum last week, the chief economist, USDA's chief economist, Rob Johansson, highlighted that 1 in 5 farms that specialize in wheat, cotton, poultry, and hogs has a debt-to-asset ratio of over 40%, and therefore very susceptible to changes in prices. So it puts the producers in that category. You know, they're highly leveraged. Since the poultry industry is a significant economic driver in my district, I found this statistic to be pretty alarming, and was going to ask you about what kind of stress the farm credit system is currently seeing in the poultry industry, especially with the possibility of avian flu spreading.
Well, the farm credit system has significant interest in that, and it has worked closely with USDA with loan guarantee programs to help deal with the risks associated with that. So quite often a poultry producer will have an FC or farm credit system loan as well as a USDA loan guarantee with it. As I mentioned to the chairman earlier, we will be pressing the system to work hard because we've had some very good times, and now we have the responsibility to help producers get through the more difficult times. And so we'll be happy to take a close look at poultry within the agency to see the exact conditions, and happy to provide you the information regarding that to any degree you would wish.
Do you feel that this statistic, the high leverage and the susceptibility to the outside influence of the avian flu could impact the ability for my poultry farmers and their supporting agriculture industry to get FCS loans?
The system will look in loan making to the potential for success, and so they'll make a judgment wanting to see a success story coming out of that project. So they'll study individually loans in that context. But yes, I think they have the capacity to take some risks associated with that. If we were in the 1980s, loan leverages would be much higher. And so during the course of what we learned from that time, the system has corrected and tried to make sure that the loan ratios are not excessive. And I think that's one of the lessons that was learned and has been applied into this circumstance. Now, for your producers, I think, again, we want to work with them, or excuse me, the system needs to work with them in such a way to make sure that they can see the plan, they can understand the potential results from it. We don't control the price, and we don't control the income, but we want to be as responsive as we can to help producers be as successful during a risky period.
So these would be the tools that are available within the system to work with a highly leveraged borrower, as you suggest. And just add a final question, what percent of the system's loan portfolio is either in poultry or related to poultry?
I believe it's 6%.
Okay.
We'll clarify that with you.
Thank you very much. I yield back.
Mr. Young.
Thank you, Mr. Chairman. Welcome, gentlemen. One thing I really appreciate about this committee in a bipartisan way is our advocacy for the small farmer, the beginning farmers as well. And just, tagging on to what my colleague said, Ms. DeLauro, about transparency in the number of loans that are out there for small farms. How many are there, and just getting an idea of the different silos you have with your loans. Small producers and farmers, agriculture, industry, something else. Trying to get a better picture of that. Can you put those in silos for us right now really quickly?
Yes. 3/4 of the loans made are $250,000 or less. And if you just let me glance for a minute, 1 out of 6 loans are to young farmers. 1 out of 5 loans are to beginning farmers. And 1 out of 2 loans are to small farmers going by the USDA definition.
Where can we get an idea and take a look at where your loans go in our states or districts? That would be very, very helpful. Do you have that information?
Yes, we can get that information for you. We may have to go to the institution involved to get it, but we can give you as...
When you say the institution involved, I mean who you give the loan to, or?
The institution that made the loans in
The regional,
geographic area.
okay.
So we may have it available immediately, or we may have to give them a call and say, we need to understand this member's district and what kind of.
Because I think that transparency would be great in helping us to get a better understanding of how you're affecting the agriculture economy, particularly with the smaller farms and the beginning farmers.
Sure.
And with my colleague from Maine, Ms. Pingree, regarding beginning farmers, it's a big deal to me, and I know it is for a lot of people here on the committee, everybody in fact. There are probably no statutory targets that you have for getting these loans to beginning farmers, is that correct?
That's correct.
Should there be?
Well,
What is your real commitment to the beginning? And I'm not doubting it, but how forcefully and aggressively are you really targeting the beginning farmer?
We have a YBS program established by Congress, and that program requires the institution involved to set their targets for what they want to achieve, and we examine to see if they are doing it. So there's not a statutory requirement for a certain level, but there's a lot of passion for it. Now, these institutions see a real direct benefit for their future is for beginning farmers to happen because it means business to them. And so they have a desire, and it's not just a complete business desire, it's a passion as an agriculture institution, as farmers. They're farmer-owned organizations, they have boards of directors. They want to see it too.
They probably come looking for you for help. What are you doing to go aggressively market and find these folks who want to get into agriculture? Do you have any programs, any outreach? What are you doing?
It is generally part of their plan within their organization, and we could certainly find you an example of a plan by an institution about what they do to do it. Sometimes they give an interest rate break, sometimes they give a collateral break, sometimes they'll have a signature loan like they do in Ms. DeLauro's area, where they will actually write a check without collateral.
You mentioned every 5 years you're going to start doing a regulatory review process. You've not done that before.
Yes, it is done every 5 years.
It's done every 5 years. Do you make any kind of report to Congress on that?
I'm not sure, but we'll certainly find out for you that
If you don't, will you start? We'd find that helpful.
Yeah, well, it would be useful. Our regulatory agenda, which we publish, has on it that we will begin in June, a regulatory review where anyone can pose any idea they have for reduction in regulation.
Okay. Mr. Pocan has left, but he brings up an issue, and I know it's an issue important to a lot of us, and that is your investments in lending for rural infrastructure. And the one that comes up time and time again is if you really want to see the agriculture and rural economy boom, it's going to be through broadband and communications. A nut that we haven't seemed to crack at times. We have a lot of cooperatives, telecommunications cooperatives in my district in Iowa. Do you reach out to them? Do you use them? I mean,
Many of the local cooperatives you have are probably financed by CoBank. And so I can't say that for sure. USDA would certainly be in some of them.
Okay.
But CoBank is one of the key providers for telecommunications cooperatives in rural America.
but for all of our regional lenders from you, we'll be able to find out who you're lending to and how much. I mean, we don't want to be conscious of the proprietary information and privacy, but privacy is another thing that I'm very concerned about with IT security, making sure that you're guarding and keeping hackers away from trying to come in and steal information and putting a lot of people at risk. I hope you're doing that and conscious of what is out there.
We restructured administratively recently to specifically raise the stature of the IT security process. We hired a new individual who has leading experience in that area, and we are extremely conscious because there is a very large portfolio of producers with confidential information.
Thank you very much. I yield.
Thank you.
Okay. Also, Ms. Laura, your article will be in the record without objection. So, Mr. Palazzo.
Thank you, Mr. Chairman. Gentlemen, thank you for being here today. In your testimony, you cited several reasons for Congress to increase the agency's cap from $65.6 million to $68 million. This is a modest increase, and I understand the reasoning you put forth in your testimony. However, I am concerned about the trickle-down effect and what signal it might send to the folks back home, and I'll try to explain that. I don't hear much in terms of complaints from credit associations and banks in my state of Mississippi, but when I do, it generally deals with increased regulation and increased annual fees assessment. They have experienced yearly increases in their assessment fees, even though their loan volume doesn't drastically increase. One executive director noted a $70,000 increase in their annual fee assessment from fiscal year 2016 and fiscal year 2017, putting them at about $500,000 annually. In your testimony, you also indicated the desire to revise and/or implement new regulations. So to bring it together, the yearly increase in FCA's annual fee assessment issued to system institutions, coupled with a desire to increase or revise regulations and general oversight, results in a logical fear for them. The fear is that because of the co-op structure of FCA, increased fee assessments, or more generally, increased operating costs, results in a decreased patronage dividend, which in turn decreases profit, which could reasonably increase the cost of borrowing. So my question for you, Mr. Tonsager, is do you believe this is a valid concern? And if so, how would you go about reassuring farmers, lenders, and others that you will remain fiscally prudent and that lifting this cap won't, down the road, result in increased costs for customer owners?
The measurement we typically use on the efficiency side is the dollar cost per $100 lent. And so 10 years ago, we were costing the system 2.5 cents per $100 of credit lent, and now it's 1.7 cents. Now, a lot of that has to do with growth. The system's scale over the 10 years has probably doubled from, the mid-100 billions to now 324 billion of assets, about 270 billions of outstanding credit. So of course, there's efficiencies in that, but it's additional challenges to deal with the growth scale and the financial complexity of the transactions that occur. There's risk-sharing events, there's use of the marketplace to do that. So our people need a very high technical level to do their examinations and make sure we understand the complex transactions that are involved with it.
Okay,
So-
real quick on that. And so the assessments are increasing. What's driving the increase in assessments? Is it the increased regulations, increased oversight, when the loan volume is still pretty much the same? So I guess that's their concern, is that there's actions being taken at the FCA that's going to drive up their operating costs, which is going to be passed on to the consumer ultimately. And are you saying that that's what you're planning on doing? But I'm asking you, how can you allay some of those fears that this isn't going to happen with your increase in the cap?
I think we have an obligation to be transparent with them and talk to them and tell them about our future plans. My senior staff went and met with the Farm Credit Council, recently reviewed completely the budget that we proposed with them and made clear to them. And if we need to go further to the individual institutions, we'll be happy to do that as well. We think that net-wise, our efficiency, our costs against their dollar per lending has dropped significantly over the time period involved, mostly because of the growth in the system. And so I think we are doing a quite efficient job for the challenge that we're with, but I certainly understand your concerns and be happy to set some benchmark with you and talk with you over time about where we go and help make sure you have a complete understanding of our costs.
Absolutely. I'll look forward to checking back with you on that. Some of your testimony, or the FCA also makes loans to various producers, and the term aquatics was mentioned. Can you dig deeper into that? By aquatics, what do you mean? I guess there's subcategories of aquatics. And are there any trends? Is this something that's increasing? We've seen increased activity in aquatic aquaculture in Mississippi. So are we talking catfish, oyster farming, or saltwater species being grown in not on the coast but in the hinterland? Can you just expand on that?
Yeah, my belief is we can serve all of those, and I'll rely on one of my folks sitting behind me here to let me know if I'm wrong in saying that. But I believe that individual catfish farms are financed. I've actually seen one, but it's been some time, that was financed by the institutions. Fishermen that go out into the ocean, and in the plains, there was a substantial amount for a while of fish farms that were inside buildings and so forth that I believe were financed by the system.
Is there any trend that you can point to?
Not off
increase loans, increase
not off the top
categories?
of my head, but we will certainly provide it to you. We can tell you what the growth has been.
Okay. Thank you, gentlemen. Mr. Chairman, I yield back.
Thank you. Oh, let me just follow up on the question that Dr. Harris had mentioned in his line of questioning. My poultry industry is very big and very important. We're the third largest state producing in the country. It produces probably at least 14,000 jobs in my congressional district alone. So the vitality of the industry is difficult to predict, and I just want to reiterate that the uncertainty that a lot of these growers face are very real, and any certainty that the farm credit system can provide to try to combat that volatility is very important. And I just wanted to reiterate that, just because, like I said, that is a real big concern for the folks in my state, and especially with the outbreak of the avian influenza. Many growers were forced to exterminate a significant amount of their flocks at poultry growers in general. So I want to call that to your attention, but like I said, I thank you for your answers on that and for your shedding some light on that. But I'd also wanted to associate myself with the comments of Dr. Harris and how important that is. Let me switch to a discussion about your budget situation. And looking at the FY17 request, your cost, or your largest cost, is personnel compensation. It appears that between FY15 and FY16, these costs decreased by about $500,000. On the other hand, your personal benefit costs increased by $1.5 million. In addition, the number of your full-time equivalent increased from FY15 to 16 by 20 FTEs, according to answers to questions for the record last year. Can you talk to us a little bit about the cost of personal compensation and how it decreased from one year to the other in conjunction with a significant increase while hiring, why the cost of personal benefits went down? And it would seem that both of these costs would increase, but talk a little bit about that to our subcommittee.
Sure. My belief is that what we see is a group of retirements of older employees during that period that have significantly higher salaries, and a group of younger employees come in that have lower costs associated with their salaries is probably the reason why that may have occurred at that time. We are required by statute to study the salary structure and compensation structure of other financial regulators, the FIREA regulators, and to remain competitive with that group. So we have our examination people, particularly are people that have nearly the same technical skill requirements of bank examiners or credit union examiners or securities exchange examiners. And so we are required by the statute to keep our competitive nature somewhat in the same range as that particular group. So we tried to put together a package to our folks, and it varies some between agencies. So we try to look for the things that we think might help us attract examiners, particularly other employees that would be in the same range. I'm speculating regarding the particular cost of the employees, why it was a bit less one year over another. The increase that we've come with is a recognition of our need to bring along classes of employees because of the very long-term development of examiners. Only about 60% of the people we hire for examination actually make it to a commissioned examiner status. The program is tough, and they have a lot of work to do.
Oh, I'm sorry, what was that percentage?
The program is tough for them to get
What
commissioned.
percentage was that?
It was only about 60% of the people we initially hire for examination
Make it to
are
that.
successfully commissioned after 4 years. And so it's a recognition, I think, on our part that we didn't have enough people coming along to fill the positions we needed filled, and that there's a number that have to drop off during that time.
All right, Mr. Bishop.
Thank you very much. Ken Spearman provided testimony for a February 2016 hearing in which an obligations table for the past 10 fiscal years was submitted. Information technology was budgeted at 0 for FY7 through FY15. FCA OIG issued results of an FCA risk project audit that was dated March 31st, 2016, where IT risks were uncovered. Analysis and data modeling play a critical role in FCA's safety, soundness, and regulatory functions. With the institutional mergers over the years and as the system works to maintain public trust by ensuring the adherence to safety and soundness standards, can you discuss why keeping the IT infrastructure updated was not a budgeted priority item? The current system structure scales back the benefits of direct customer access to the institutions, and operating through remote locations removes the local lender understanding of agriculture and credit needs, as well as commodity types that producers have come to rely on FCA to embody. Are we inadvertently setting ourselves up for an economic crisis in the agriculture community by having institutions that could be too big to fail? And how is FCA keeping a watchful eye on the inherent risk that would arise by having too few banks? And then I'll just ask my second question to expedite time. As reported in May of 2016, the drought monitor, the country suffered varying drought conditions ranging from severe to extreme, from California to the Midwest to the Southeast. Just can you comment on how the drought conditions impacted your member banks and institutions? And do you have any recommendations or suggestions to minimize the financial effects caused by drought?
Well, first of all, Chairman Spearman wisely chose to create a separate division relative to IT and information technology and deliberately work to adjust the needs associated with that technology to make sure we had adequate security, especially in that area. So I just wanted to respond to that portion of the question. When we see drought conditions, we monitor for those as well. And so when California has occurred, we closely studied.
I'm sorry, were you addressing the
you raised a question?
IT?
Yeah, IT.
Okay, you're saying that even though you didn't request money, that you have now set up a separate division for that?
We have always funded the IT division, so I'm a little unclear why you would see a zero report on our budget balance for that particular area.
It was in conjunction with Mr. Spearman's testimony. He provided a table for fiscal 17. And the
Okay.
information technology line item is zero.
Yeah, and my staff just pointed out to me, if you go to management services, the generally, it was not broken out as a separate category. There were certainly funds used for information technology, and
But it just wasn't listed.
it was not listed in that category. And so we have a substantial commitment to information technology, and I apologize that it's not broken out specifically for you in that column.
It would be helpful to us if we could
Certainly.
at least see it. It was a little bit more transparent for us.
Yep, thank you.
Now, go ahead with the drought.
The drought, what we do is we look closely at the safety and soundness of the institutions involved, and so we will ask them to look at their portfolio under the drought extreme circumstances and give us an idea of how much risk is to the institution. One of the things I want to move us towards is a more information approach about the individual producers and how that affects them as well. We rely typically on USDA data when we look at the circumstance in that area, but I want to grow our understanding as an agency about the direct effect. As the federal regulator, we look at individual institutions' safety and soundness. We need to spend more time looking at the safety and soundness of the individual producers. So that's part of my plan, at least in the expansion of that.
Yeah, and we have a real concern with the drought monitor itself, making sure that the drought monitor gets accurate and reliable information in a timely manner. We've had some issues with that over in the southeast, particularly in my district, and I don't know if you could perhaps give us some advice and counsel on what we need to do to make sure that that drought monitor process works effectively, efficiently, and timely.
Okay, we will certainly do so.
Thank you.
Thank you, Mr. Chairman. I'm going to bring up the infamous Verizon loan, not because I want to shame you or anything, but I want to make sure that this isn't happening again. I was pleased to learn that last March, the FCA issued guidance through book letter 67 to its lending institutions to guard against these types of similar entity lending loans. And so my question is, are these procedures, you having the proper oversight to make sure these procedures are in place? What are they? How do you keep an eye on this? Just give me an overview of what happened and where we're going with this.
We provide guidance to the system institutions regarding each of the programs, in this case, a book letter. And so they are allowed to make these investments. Now, the similar entity lending is an initiated loan made by a bank. And the Farm Credit System is offered the opportunity, if they choose, to buy into that loan at the request of the bank making the lending involved. But we provide this structure to them. They have also internally gone through a significant amount of work to improve the guidance. They recognize the reputation risks they have in making these loans. Additionally, so they can go out and make the loans, but when we examine an institution, we look at those loans to look and see if we can find where they might be out of compliance with the statute or a regulation that we provided to them. In addition, individual bankers or other parties might identify to us the kinds, a loan that they are concerned about or investment they are concerned about into these kinds of loans. Our regulatory staff and our general counsel will consider each of those loans as they're identified and cause the institution, if we believe that it's out of compliance, to deal with it.
So that would be maybe divesting. So how, over the last few years, how many times can you think of some instances where the FCA asked Farm Credit to divest itself for whatever reason because of what may have been legal but looked bad and wasn't in the spirit of the law?
I can think of 3 or 4 offhand, but I'll ask my counsel if he recalls. Is that a correct number?
That's probably about right.
It's a small number in the 3 or 4 area.
Well, thanks for keeping an eye on this, and I hope you'll continue to be diligent. The past 5 years ago, the farm economy was doing better than it is today. It's suffering a downturn. And last month, a Hoosier Ag Today article referenced a conversation with the regional vice president for Farm Credit Mid-America about the outlook for 2017. And the article referenced how many are referring to 2016 as a year when many farming operations burned up the last of their working capital, and many farmers would be facing hard decisions. So the question is the FCS, are you tightening up loans with farmers then because of the downturn and because of the burning up of capital that is alleged?
Well, I would say certainly there are some farmers that have burned up their capital. I don't think it's a very large number at this point. What we're finding is many producers who are young don't have established capital in real estate and so forth, and so they appear to be the most vulnerable to that kind of thing. So it's of great concern. Of course, that's the group we want to keep in business. I've not seen per se, a deliberate tightening or a policy that says we're going to tighten capital at this time.
Okay, so if you were to tighten capital for the farmers, beginning farmers, or just your average farmer, producer, where would your loans go?
I'm sorry, I don't.
Where would your loans go if you weren't loaning to them? Where would you focus on? Where else would you look if you found that it wasn't a good deal to be doing as much lending to the average farmer or beginning farmer?
I don't know that there would be a look anywhere particularly. They would take customers as they came in, I suppose. But so I don't know of a deliberate strategy that says we're going to shift from this group of farmers to some other group. Generally, the system is not restrained other than to the amount of capital it has that can support lending. So it doesn't usually have to choose between one or the other. If it has adequate capital, it can loan. It's not restrained otherwise. So if such a thing existed, I would be extremely concerned if there was a deliberateness in that kind of a movement and a desire to move away from servicing a particular group. I think that was something where the regulator would have to intervene and take some action.
Well, I hope you'll make the backbone of your lending to the beginning farmer and really come up with a strategy for them, as well as just your average farmer out there.
Yeah, I would agree.
Thank you for being here, Chairman and Mr. Hall, and I yield.
Thank you, sir.
Ms. Pingree.
Thank you, Mr. Chair. I have just two more questions, and I'll put them together so you can answer them both. My first is similar to some of the questions people have asked about the challenges that farmers are facing around the forestry industry. In our state, about 39% of Farm Credit East loan portfolio in Maine goes to forest products. So that's the largest segment of your loans, of their loans there. And I know that's a very highly valued relationship. It's well respected in the state. The forest industry is worth about $882 million to our economy and supports about 7,300 jobs. So that's a big impact. And as I'm sure you know, there's been a lot of transition in the forest products industry. We've seen closure of a tremendous number of mills. And there's a lot of work going on right now to examine what other kinds of forest products we could get in, how can we be more competitive in other industry, and what kind of technology could help us looking into the future. So I'd love to hear you talk a little bit about how Farm Credit has been supporting the forest products industry, similar to some of the challenges people have had in dairy and other kinds of agriculture. And are you looking at any kind of flexible lending during these tough times, or have you implemented that? And my other question, just so you can go into the second one, I know that you do, in a variety of areas, a lot more than just credit. You help people with record keeping, estate planning, crop insurance, and really do assist farmers in a variety of ways. So it's possible that, like me, you've heard a lot about the farmers who have to implement the FSMA rules, Food Safety Modernization Act. It's raised so many concerns. There's a lot of uncertainties out there. Just in Farm Credit East, there are 14,000 customers, so they interact with a lot of farmers. They probably have questions about FSMA. It seems like Farm Credit could be an important resource to people, and I think you've done a little bit of that. So could you talk a little bit more about plans to help farmers transition, helping to educate farmers about it, even if it's just referring them to other places where they can get that information, because there will be capital issues in that, and they're both important. So I'll just give you the time to talk about those two issues.
Thank you, and I agree completely regarding the forest industry, and it takes long-term capital to help do that. but also the sale of some of the off-put from the forest market, such as the pellet industry that is predominant in your state and the region. I've seen the use of timber for the purpose of heating greenhouses, for example, where they use the extra timber in that area. So it is an important element, and I appreciate that. I'm sorry, the second part of your question, I was so wrapped up in thinking about the first, I just...
Do you want to answer about FSMA or more about the forest products industry?
FSMA, since the farm credit institutions are cooperatives, they have the ability to address other issues like that. And I know particularly in the food products industry, they provide webinars to individual producers so they can get the information about the requirement of FSMA in order to make sure their food products might be more usable in the more substantial market in the Northeast, particularly food products for local food markets up in that area.
So what you're saying is you think there's some activity going on, but it's possible there could be more, or?
Yes, certainly. I think that there is substantial development of food products market and in the Northeast as well as across the country. And so those requirements, they have the ability to work with their producers and giving them the information necessary to make sure we have qualitative as well as quantitative products available.
Great. Well, I hope that continues throughout the country. Certainly, I think farmers are going to need assistance in making the transition, but as I said, there's also capital requirements to make sure food processing that happens on farms and a variety of things that people have the finances behind them to make those changes. So I'll yield back the balance of my time. Thank you, Mr. Chair.
Thank you, ma'am.
Ms. Doral.
Thank you very much, Mr. Chair. First off, I'd like to second what my colleague, Mr. Young, has said, and I hope that we can work together because I think that this re-examining of the rationale for this similar entity lending and what this means and what is happening in this realm, I think, is a real concern, and I think that we need to really have Congress take a look at this again and to make a determination as to what it really means for the lending process. Let me just ask a couple of other questions, Mr. Tonsager. In your testimony, you mentioned that the agency's spending is limited annually by Congress. You further describe these spending limitations put in place by this body have required you to delay hiring actions, reduce travel relocations, and delay the execution of information technology projects. Do you know why Congress began limiting the spending of your own funds? I'd like to couple that. I'll take a page out of my colleague Ms. Pingree's book here with regard to, again, in your testimony, you talked at the budget caps established by Congress. You had to delay hiring, all those things that I just said. You further describe over the past few years some of your seasoned employees have retired, that you expect many more to retire over the next few years. So my second question is, can you tell me how President Trump's January 23, 2017 memorandum regarding the hiring freeze will further impact the work of the Farm Credit Administration? And as I asked the Inspector General, I guess a week ago, I would like to hear from you and get a report from you of what that hiring freeze means specifically, what you will not be able to do, whose loans you will not be able to service, what are the services that you provide that will be curtailed. So why did the Congress begin limiting your spending of your own funds, and how will the hiring freeze impact your work?
Well, the farm credit system is a unique enterprise. It's been around a very long time. It does not use federal funds, but I believe Congress, the cap has been in place for many years. And so we, I think, are required or obliged to report to Congress, talk about that, and I think the intention was to make sure that we don't do something excessively. So it's not, I think, something that concerns us that we have to report to you all, of course, that what we're doing, and it's an important part of our process to do that. The effect on us, of course,
How much oversight do we have?
Pardon me?
How much oversight do we have on, with regard to you? What is?
We're
what-
generally
what-
subject, we have, subject to the full committee. We meet with them and occasionally with the Senate full committee and report to them.
What's occasionally mean?
Every few years.
Every few years?
Yeah, I can't recall the exact number of times it's been before the Senate, but generally we've, and we have ongoing contact with your staff all the time. We have a working staff that provides our information. We provide reports to the committee staff and to other members' staff about the functions of our agency. So there is a steady supply of material that's provided by us to the Congress about our individual activities.
You report to the Senate, you report to the House? How often do you come and the oversight with regard to the House? Is that every few years as well?
Annually? Every 2 years.
Every 2 years, okay. And the hiring freeze, and I've asked for the report, but just off, tell me about the hiring freeze and your services.
Yeah, we've been restrained from hiring some folks. We have targeted investments that we want to make into IT technology that we haven't been able to make yet. Travel has been restrained, and for us, the examiners, we want them to be in the institutions. We gather a lot of data from them directly by transmission of data.
So that the ways that you've had to curtail your hiring, your IT, et cetera, that compounded by the hiring freeze that the president has proposed?
Well, yes, it has restrained us from hiring some people that we'd like to hire.
So that will cause you a further difficulty in order to carry out your job?
Yes, ma'am.
Okay. Thank you, and I'd appreciate the report. Thanks so much.
will
Appreciate
certainly
that.
follow
Thank you,
up
Mr.
with
Chairman.
Yeah, thank you.
Let me switch to a little bit about the examiners, and talked a little bit about it earlier, but of course, the single most important role of the agency is the safety and soundness of the system, or in layman's term, is to make sure a similar event does not occur like the crash of the 1980s. This is best accomplished by ensuring the integrity of the citizens' financial institutions through examinations and other checks. One issue I've come to understand is your difficulty in retaining talented examiners, which comprise a majority of your workforce. And due to the uniqueness of the farm credit system, you provide specialized training for these individuals. This requires a significant amount of time and financial commitment. However, you seem to lose these individuals relatively quickly, either to the system itself or other agencies under its purview. You discussed a little bit and referred to about 8 to 10 leaving per year. What is your overall retention rate in the office examination?
I'm sorry, I'm struggling to come up with a number. If I could get some, Doug, if you could help me. We have about a 10% attrition rate. So I suppose that would mean about a 90% retention.
Okay. What is the average cost and time commitment for training a new examiner?
I think the costs over the 4-year period are close to $500,000
Per examiner?
per examiner. That's why we very much want to retain as many as we can.
Yeah.
Of course, along the way.
Well, given that significant amount of investment, it seemed it would be wise to require certain length of service in exchange. I know other agencies do this. Our retired colleague, who was the ranking member of the subcommittee, Sam Farr, will use the Peace Corps. He was very supportive and very involved with the Peace Corps. That is an example. Do you have any policies like this, or anything preventing you from putting in place some kind of policy like the Peace Corps?
That's a new question for me. I'm sorry I can't directly respond. If my staff could tell me where I can provide a direct response to you. I would say that our Inspector General, as part of her process, looks at elements of the agency all the time, including the examination process, and provided a report to us, I think, not long ago about the retention in the program and so forth. So let me find a good answer for you. I don't know if we legally can provide that kind of a restraint on them, a sign-up period, as the Peace Corps may do, but I'll certainly get back to you regarding that.
Well, and let me just say that, if you do need some specific legal authority to do this, please, let us know. But like I say, it is a significant amount of dollars that are invested, as you say, $500,000 per examiner, and my impression is, and my understanding is, that many of them do leave fairly quickly. And so I think this is something maybe that you seriously want to look at and explore, and if you could get back with us on that as to what the options might be, I think the subcommittee would be very interested in knowing that.
Yeah, certainly. I would say that it takes about 4 years, and those that are leaving are generally in the 8 to 10-year category, where somebody comes in and might compete with us and cause them to move on to a different area. So generally speaking, we probably have their services for those who leave. Many are very long-term, of course, but that group that might move on, that's kind of the category that the area that we lose them at.
Okay. Mr. Bishop.
Yes, sir.
Thank you very much. The administration and congressional leadership on both sides of the aisle have indicated that rebuilding the nation's infrastructure is a priority. Funding for infrastructure projects will be critical, of course, to improving the roads, the bridges, the ports, in order to energize the economy. Given the fact that rural communities and agriculture also depend on infrastructure in order to thrive, do you share my concern that steps need to be taken to ensure that rural America is not left behind in this infrastructure building process? And what do you see as FCA's role in restoring America's rural infrastructure?
I think our role and the tools we have give us access to GSE funding, which has been highly competitive with federal Treasury rates. And so I think in the long-term financing of rural infrastructure, including broadband, we can bring access to those resources that do that. And we have expertise in working with small communities, especially on rural water and rural electric systems, as well as broadband systems. So I think there's capacity in the system to do that. Those loans are typically once they're in place, are very successful loans, typically the way that they're structured. We don't have the capacity to provide grants, such as USDA does, or other federal agencies have that capacity that can bring the cost down into a more affordable range.
Do you partner with them?
Yes.
Rural utilities,
Yes.
For example?
Yes, it's rural electric, rural water, several
Broadband,
categories.
so
Yep.
you could actually partner with those communities that may be able to get a grant from them, and then you can also offer
Yes,
additional funding through loans.
we can, and we do. And so I think it's incredibly important. We also get into funding hospitals, clinics, fire halls. We make investments. Those have to be structured as an investment option for the institutions to be involved with them. And the system has partnerships all over rural America and does all kinds of things in those categories. And perhaps there's another time we can talk about them.
You mentioned hospitals, which is, rural healthcare is really, really critical at this point in time. Rural Development Agency does have the Community Facilities Program. Are you partnering with the Rural Development Agency on some communities that are trying to maintain and expand their healthcare facilities?
Yes, absolutely.
Through the Community Development, Community Facilities Program?
Yes, and we require that a farm credit institution engaging in that must offer an opportunity for a local bank to be involved with the project as well. So part of the information we give them, or the letters we give them, has that requirement on each of those kinds of projects that they seek out local participants.
Is that number increasing or is it decreasing around the challenges with the ACA?
I think the demand is increasing. We have slowed somewhat because we are now improving every project that is identified individually. We did a test with them where we allowed them all to do it, and as we examined the results from that, we found that we have to now go to this approval process to make sure they stay in compliance with the federal statutes.
Thank you, Mr. Chairman.
Mr. Young.
Mr. Hall? Yes, sir. Nice to see you. You are chairman of the Farm Credit System Insurance Corporation, correct? That is correct. Set up to be a backstop to help the FCS if there's a failure, if there's a problem. It currently has a capital of around how many billion?
It's around 4.5 billion.
4.5? And it had credit line to, from the U.S. Treasury for about 10 billion?
That
from
is
what
correct.
Okay. Is this a sufficient amount with assets over 300 billion dollars?
We believe it is adequate. When the Farm Credit Insurance Corporation was established, a 2% secure base amount was determined to be actuarially sound. So as the system grows, their assessment to fund that insurance fund has gone up. So we believe based on what Congress approved, we are sufficiently covered.
Okay, so you're not looking to change that in any way, or?
No, sir.
Okay. That ratio, compare that to that of the FDIC in terms of cash or capital on hand.
For the insurance fund, I'm not sure how it compares to other FIREAs. I would say that it's pretty consistent among other federal agencies.
Okay. What is the funding mechanism for the corporation, and is there any reforms that you think need to take place in your opinion?
The funding mechanism is through an assessment. You mentioned the assessments to the institutions earlier. As the size of the institutions grow, the amount that they have to fund the insurance fund does increase. And we've seen as the system grows, that assessment has gone up. If there was a year where there was no growth, then the assessment would not increase.
Okay. And being raised in Indiana, getting a degree from Purdue.
Yes, sir.
And working for Kentucky, who do you root for in the March Madness?
Well, it's a complicated thing in my household. I went to Purdue, my wife went to the University of Louisville, and my daughter is getting ready to attend the University of Kentucky, so it gets more complicated.
So I think the safe answers are Alabama or Georgia. Thank you, Mr.
In this
Chairman.
area, yes.
Thank you, Mr. Hall.
Thank you.
Thank you, and thank you for Mr. Young for asking that question, Mr. Hall. That was something I had on my list that we wanted to ask about because the Farm Credit System Insurance Corporation is very important, and knowing that that is set up as a backstop to help the farm credit system during a failure is very important. So thank you for Mr. Young for calling attention to that and to get some clarification on that for the subcommittee. So, well, at that time, I think, with that, let me just say thank you all both for being here today and for your answers to your questions. I know you want to follow up on some things that you can get to us at a later date, but we appreciate the work that you do with Farm Credit Administration and your service there, and we look back to having you in the future. Maybe it won't be another 19 years. So the subcommittee is adjourned.